Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Avoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Hello and good morning.
Morning, everyone.
So at least some of the links are working. We were having a couple technical issues with the links. Some of them are locked, or private, and I still haven't been able to get to that.
Hopefully they were able to get it through the link on the Hawkeye's session link that shows everything 45 minutes before we get started. That should be working, shouldn't it? The Hawkeye link.
It's a private channel.
Oh, that is?
Yeah, you need to access it through the back office.
Oh, okay.
So anyway, let's give it a little bit more time for some people to come in. Good to see you guys this morning. It's Friday. Last trading day of the week for the Forex. I heard some whispers of people starting to get involved in some crypto.
Trading it? Are you talking?
Yeah.
Really?
Using the software, yeah.
Ooh, that's pretty cool.
Yeah, it's interesting. So I it's just whispers out there right now. So
yeah, I think
I'm looking at a British CAD just so you know that, seeing if there's anything. I've got a zone in front of me, but I'm seeing if there's enough for him to take a trade on this when it breaks through.
yeah. So we got your live account there open, eh? We're seeing it.
Are you seeing my Arrow
Lucor
account?
No, well, Lucor Live, yeah. With US Tech open?
With you, no, you shouldn't be seeing that one.
Yeah, that's what we see. So you might want to.
Let me double check here. Let me see. I got the wrong. I have the wrong.
That's awesome, Charles. 139 pips on Ether. Amazing.
Oh, let's see. Where are we at here? Just I stop sharing. Thank you. Let's see. We got sharing. Should be. How about now? Is that better?
Yeah, much better.
Okay, thank you.
Yeah, I figured that was the wrong chart there. I know you trade a couple systems, so and certain systems, you got to be in drawdown sometimes.
So. Some systems when someone gets inaugurated, it just sends the market into a tizzy.
That would be an understatement.
Let's see. I'm going to try and use a different monitor today. It's a little bit closer, easier for me to see it today. 3622. I don't know if this is going to be a tradable trade or not. Let's see here a second. Target 173. Well, it's just about showtime.
Just got a Euro Swiss.
Okay. 930.
All right. So I think we're good to go over our disclaimers and whatnot.
Yeah, let's do that. Let's get those out of the way. Let me get a different chart. Let me get my other screen up, and we should be on our way here. I'll get the recording started. Let me get my screen sharing, and we'll be started here. Okay, everybody sees the Hawkeye splash screen, I think, hopefully.
Yep.
And here we go. Oh, we've already been recording here. So anyway, good morning, everybody. Good morning. It is a Friday. Welcome. This is Friday, January 22nd. Welcome to the Hawkeye session. We're glad you found us here, and we're just going to have a fun day today. And we'll get the disclaimers out of the way. We'll be gone from 7:30 to about 9-ish, maybe a little bit later. I don't think there's anybody coming in behind us, so we may be able to go a little bit later, depending on how things go today. Trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trade taken during this live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. And on that note, let's go to the charts. And we have, everybody should be seeing my screen. I've got the Euro British CAD up here right at the moment. We had an arrow on the British CAD. I don't know if there's enough room for the up. We do have a zone that's formed right here. It's a really thin zone, but nonetheless, it is where the overnight high has been taken. Here's your overnight, the new day session. This is your overnight high right here. We did form a little bit of zone with this little pull down here. It's really right in between two major zones. And so if it does break to the upside, it's a good chance it could break to the upside, turn around, come back to the downside. It is overall in an uptrend, which you can see by my arrow right here. And what I'm going to start doing is I'm going to start putting these arrows right by where the zone in the direction. And that way, if this zone goes away, I'll know that maybe the direction is starting to change a little bit. So we're going to check and measure this out. I'm going to see here is where the entry would have been. Here's where the 20, that's 45 pips. Am I reading that right? 45 pips up. 70, 360, 74. Yep, that's 45 pips. There is room to take the trade to the upside. The only thing is we do have this little pesky little zone right here. It's where it came up. Nice little gradual move coming up. Hit that level, rejected, and now we're starting to get just a little sideways motion in between here. This range is we're looking at a 44 pip range. So basically, it's if I can break through that, we have room to the upside, and we do have. This is on the British CAD. We do have some strength. We'll see if this thing, what kind of a candle this thing can make on this. But right here is where the entry would be. And since it's already left, I'm going to wait and see if it pulls back a little bit. So that was that one. Let me go and put a target in, a 20 pip target. Where entry was at 173.62. So 173.82 would be the target. So it'd be 1.7382. And that's really right up there where the top is. We're almost at that 20 pip target already. So let's just wait and see what happens with that. I'm going to hold off. I'm not going to be real anxious to take a lot of trades today. I've had a really good week. Today's Friday. I really hate giving up my gains for the week on the last day just because I was wanting to get just a few more pips in the bank. So we're going to pass on that one. And now, Eva, you said what was the other one, the next one that came out?
Shoot, what was it now?
There's something Swiss, I think.
Is it? Oh, hang on. I have to go back to my chart.
I took my.
It was the Euro Swiss. Sorry.
Euro Swiss. So I've got I try and keep these. I've got all my British pound ones on the left. I got my euros in the middle. And I've got my other ones sort of on the right-hand side. I know my CAD and my Swiss are right here in the middle. So that way it helps me. With Euro Swiss, you said?
Euro Swiss, yeah.
Euro Swiss. Here we go. Let's take a look at that. Ooh, that's all right. I immediately look and see this is in a downtrend. Let's see if it scrolls in any further. We're in a downtrend, and it was a buy or a sell.
It was I believe it's a sell.
Looks like a sell. So we are in a downtrend. It's a sell. This one may already be out of the.
I don't think it had
No. It's actually right now. Here's where the entry was. Open was at, we call it 107, say 60. We'll call it. I'm just going to double click here. 1.0760.
So as we're going over this, if you guys have any questions about anything you see or anything that comes up, please make sure that you put it in the Q&A panel so that we can address them and they don't get lost in the chat. That way we can make sure we address any and all concerns. And then moving forward, we're gonna work on whatever challenges we had with the links.
Yeah, I had no idea there were issues with it until yesterday.
Yeah, some people had some challenges. So
see, we have 4 pips to the downside. Is that right? Am I looking at that right?
Yes, you are. Not enough.
Well, yeah, there's not enough room. So that's not a trade. So we're just going to have to wait. This is, we call this Open Mic Friday. You're welcome to ask any questions that you may like, and we'll either address them or we won't, depending if it's on subject or not. It doesn't always have to be strictly on topic, but if you have any questions about platforms or trading or strategies or anything that you want to interject or talk about, feel free to tap it in the question answer box. And if it's a lengthy discussion, we can maybe always turn your mic on if it's something that we can address that way.
Yeah, just raise your hand, guys, if you want us to turn your mic on while you ask your question.
Nice to see all the people in the room today. That's so exciting.
Well, now that we figured out about
and now that people know that we're here, it's just it's kind of amazing what can happen. But we're just going to be. I said we'll have this discussion, and
I've got a question for you, Al.
Yes, Eva.
Can you discuss what leverage we should set as beginners?
What leverage we should set? What size position size you're talking about?
No, I think he's talking about leverage, like the 1 to 500.
Leverage on the account. Yeah.
Oh, let me think about that question for beginners.
Well, don't forget it's Forex, and you really can't do a whole lot with much less than that.
Yeah. Oh, okay. I was trying to wrap my head around what the question was.
Yeah.
Leverage. When you set up your account, we're talking about what kind of leverage with your account. And that's a very good question, because if you open up your Forex account with a U.S. based broker, and if you're a U.S. citizen, you're going to be limited to a 1 to 50 ratio for your leverage. And that may not sound, but as opposed to but you can be a U.S. citizen, and there's other brokers out in the world that will accept U.S. citizens. Not all brokers will, not because you did anything wrong, but because of the U.S. regulations have become so complex for some of the international brokers. They just say, we don't want to bother with it anymore. But most of the brokers that we use offer a 1 to 500 leverage, and I would say no less than a 1 to. I prefer no less than a 1 to 200. If they offer me 1 to 500, I take a 1 to 500. And it's basically what that does. It allows you to use your money without the broker putting it into a side on the side saying that we don't want you to hurt yourself, so we're not going to let you use all your money. And what oftentimes happens then is that you want to get into position, you can't take the lot size that you want because the broker's holding money off to the side that you can't use. With a 1 to 500 leverage, you're able to use basically 10 times more of your own money than what the broker with a 1 to 50 leverage will allow you to do.
With also a 50 to 1 leverage, there's certain currency pairs you can't even take a position on.
Yeah.
So you're limiting yourself by using a U.S. regulated broker. Understand also that this is not financial advice, and we don't make any recommendations for brokers. If you want more information about specific brokers, I do know that AP is going to have a section on their page with brokers that our clients, customers do use, but we cannot recommend brokers for legalities, because whenever you start recommending brokers, you're going into some dangerous waters. You're now providing financial advice, and in order to provide financial advice, you need to be licensed to do that. So we need to stay above board and everything, and that's why the whole discussion around brokers and whatnot kind of puts people in on guard, because there's a lot to it, and we got to be very cautious about what we say and how we say it so that it doesn't get misinterpreted.
Now, having said that, if you're inside a private trade group and you just have a bunch of people that you trade with and you know them and you want to discuss some different brokers with that's I believe that's perfectly okay to do.
Actually, guys,
but go ahead.
Sorry, just time kind of thing. Robert has posted that the British CAD looks like it's ready to break resistance. That came in at 7 o'clock, I believe, that alert. And there is room to the upside. So I don't know if you guys wanted to have a look at that right away.
Let's take a look at that one here. British CAD. Yeah, that was one I think that was the first one I think I looked at this morning, isn't it?
I'm not sure, to be honest with you.
But yeah, this is one. If I have it marked right here, this is where if you got in right where the arrow alerted it, your 20 pip target is right on the other side of this red zone. But you can see that this price is rejected at this point earlier. British CAD. Let me take a look at see what. Let me put this one under a little bit of a microscope and see what it looks like. You can see there's a big difference. And when you look at like this move here from here on up, this is almost like a rocket ship. It goes almost straight up. And you see that this move is a little bit more gradual. It's just gradually sitting there working the way up. It hits this level and then boom, it comes back down. This angle here is almost the same as like this angle up here. So basically down here, it found a bunch of buyers down here, drove the price up. This is where the sellers came in, drove it back down. Buyers come back in again. And here it just sort of meanders its way up just a little bit higher. Find some more sellers up here. Boom, comes right down and forms a little bottom. And now it's right up testing this little area. This is all right here where the London session opens. You can see where the money zone is. And right here is where the London session opened up. London opened up, drove the price down, coming back up, came up a little bit down. You've got a little bit of a trend line coming in under the bottom of this. So we take this and just make a little trend line.
Yeah. Looks like a nice wedge, don't we?
Nice, a little bit of a wedge with a flat top on the top. If it breaks out of the top of this, you'll probably be looking at this area over here. You can, if we can slide our, let's see, I can have a hard time moving this. Let's see here, British. Let's see, I'm looking at my yesterday's chart. There is some about 73.82. There's some resistance. It's an area where the price is rejected. When you look over here, I don't know if I can get it over here or not. Let me see if I can.
Probably not because of the limited amount of.
Oh, there we go.
You got it.
There we go. There's an alert coming in Swiss. We'll take a look at that one. But this is the area where this thing came straight up, big rejection all the way back down. Now it's just gradually working its way up. Once it gets up into above here, this will be the next area where you're going to start seeing. So if it can break through that, you've got a shot at it. Right now, I would be a little bit leery to take it. I'd like to see it break. If it breaks through, gives us another arrow, we still have enough room to get to. There was like 40 pips from here to here, so it still may give us another shot at it. U.S. Swiss. So we'll take a look at I'm not going to be anxious to. I'm going to be real anxious to take that one. Like I say, you got that zone sitting right there on top of it.
Well, what if it breaks through the zone, Al?
If it breaks through the zone,
Yeah.
If it breaks through the zone, you would wait for it to break through, pull. Let's see, where's that British CAD here? If it breaks through the zone, if it breaks through that zone, it's going to break through. If you just get a wick above, I would not take it. If it breaks through it and closes, I would wait for it to pull back to where the zone is, wait for a little bit of a pullback, and then maybe take it long at that point.
Because there's over 20 pips from that point.
Yeah, because you've got plenty of room. And also if you look at the trend line here, you'll see that you've got here's an anchor, here's a hit, here's a hit, here's another hit, here's another hit. This trend line, and you see it wasn't a real strong move. I would say that right now you have an upward trend, but once it hits, it could break out here. This could be a trap. I would call this a trap where you have a nice gradual trend, comes up, hits this trend line, gets rejected, comes back down, hits this trend line, gets rejected, and just works its way up gradually into here and by this time, now you're already up to the zone. So I would stay out of this one. Mainly because of this trend up here. If you're going to take it, I would want to see it pull back a little bit deeper with an up arrow to try and get it sometime in this area with this zone being out of the way. Break through the zone, have it go away, come back in, and give you another shot at your target.
Yeah, that's pretty good. How about let's divide and conquer these three next alerts, okay, guys? So
Okay,
we got.
Okay, I'll take the U.S. Swiss.
Okay, Ava, you want to do the Kiwi US?
Yeah.
All right, then I'll use the pound Kiwi, and we'll see what we got going on here.
I'll look at the U.S. Swiss real quick, anybody, and we'll divide and conquer. That's what we do. All right, we're going to scale in. Right now, we're seeing what our direction is. We're going to find out what our direction is. Let me zoom out. Let me see, I've got a lot of red bars, one green bar. So we're looking at a downtrend. Now, I had a up arrow here yesterday, and you can see that there was a green zone right here with an up arrow. That zone is no longer there. It's history. So what that's telling me is that the down move is starting to become a little bit stronger. And now you see where this arrow now is now switched over, even though, so we had this way over in here. I'm going to go and put a down arrow. Just try and find little things to help clue me into which direction to be taken. So now we're looking at, this is the area that we're looking at it for our direction. I do this without taking so we're looking at a down direction. I'm just going to take this one off. And we're going to zoom in. And we have a down arrow with an up arrow, no trade here. And you see that this came right up into this zone. And so we're not going to take that trade. And even if we did take it, looking at the room we have, we'll say that we have to have a clear shot to this upper zone with nothing in between. And we need 20 pips. So right there, that's only 9 pips. There's the 20 pips mark here, which means it's got to go a third of the way into this big red zone before you ever get your 20 pip profit. And so this is a no trade.
Yeah. So now to add on to that, actually, now that we did the setup and the analysis, if we do get a short signal or a short trade idea on the US Swiss, we already know that we're probably going to want to take that, right?
Right. Yeah, if it comes all the way up, breaks through the zone, comes up, bounces, bounce, arrow, down arrow, and a go. If we can get we're going to see where this area here is, what the price of that is. So let's go and put some lines up.
From the green to the red, right up there?
Yeah. So we have, say this is at a 88.44. So if we can go at 88.64, we'll call it ish. 88.64. So I'm just going to prepare this for a little bit just in case. So I'm going to go up to 88.64.
Yeah, keep on going up a little bit more.
A little bit higher, right about. That's probably close enough.
Yeah, it's close enough for me.
Which is really right at the top of this. So if we get up here, come up and get a bounce, and we go and get our object list.
Mm-hmm.
I put a target in and edit at 0.8844. That would be our target. So now if we can sort of prepare this, we want a down arrow somewhere above this blue line, and we know we have a target here to the green. We know that this is there's buyers coming in down here. We know there's sellers coming in up top here. A lot of sellers came in, came back up, retested this zone, came back down, going sideways. So right now you've got a range between just inside here, and you really it's 20 pips from here to here. You're not going to have a whole lot of room for this thing to bounce, give you an arrow in order to take this thing short. But we'll just take a look at it and see what happens. But that's no trade. And how about the other one there, Eva? What you were working on New Zealand, US?
The Kiwi US is actually looking good. It's got strong downward pressure.
Kiwi
so it is
US.
in downward trend. It is right going through a green zone, however, but the blue line, the moving average, is well above the candle formation. So
Okay.
and then there's a ton of room between the two green zones. So
New Zealand USD. Let me see if I can.
have a
I'll
look at
maybe.
that one. And the thing is that the candle that's forming right now is just straddling that green zone. So I think if it goes through, it's going to wipe out the green zone altogether, and then it's clear sailing down to the next one.
Yeah. So right now we have 1, 2, 3, 4 red. We have 1, 2, 3 green. It does have a downward bias to it because of this little zone that was just created here not too long ago. Let's zoom in. Make sure we're still on a 15-minute chart, which we are.
Yeah, you are. You're good.
And we're going to take a look at this. Now, I do like the fact that our moving average is actually in a nice little downward slope. If the moving average were just flat like this, I would be that would be another no deal to me because there's you have no strength to the downside. You also have, here's a high, here's a low, here's a little higher, a lower high, lower low, lower high, lower low. So it's trending, came back into this area, it's bouncing, but you see it's starting to break through this. As we come through, let's just see if we have room to the downside to be able to take the trade. So we're going to we had the alert at, this is 71.72. So I'm going to put my lines up, object list, open trade.
Actually, Robert makes a good observation that it looks like an M formation.
Yeah, I can see a wedge in there.
72. What was that price again? 71. I get that right? 71. Oh, we got to move this out of the way. 71.72. That's right about where it is. Okay, and we have a target of 0.7152. So there's plenty of room there, and we're going to have our stop. 0.71, actually 7202, 7212, 7212. That's our stop. So there's what we got. So it looks good there. And New Zealand, US. Let me see if I can.
Yeah. So I had this one up. Overall, we've got kind of an uptrend, you know. We zoom out as far as we can. Let me share my screen real quick, Al.
Okay.
All right, let's do that.
Let me stop sharing, and you got it there, Matt.
Perfect. So I'm very visual when it comes to this stuff. So here we've got a lot of green, right? So what I did is I zoomed out as far as I can go. We got a long, strong buy bias, more or less. Now, if we want to go back down into the where we are today, we can look. We can see there's a green zone down here. We got a buy, so bounce, arrow, and we already know that we want to look for buys because this is a very strong. But we have a red zone here, one, and then we have a really strong red zone right here as well. This concerns me, and to the point where I'm not a fan of jumping in here. Unless,
I would say, again, I'm going to say a no to this one. It's bouncing off a key level that I would say that it would have to. I would have to see it cross. I'd like to see where this thing breaks. I'd like to see it break and come back a little bit and retest where the break was, and then go down. I would just see like a little bit of looking at this as being somewhat of a valid bounce point right here, and let it come back down, come back, retest that point, and then come back down for the target. Then you could you might not, you may have to go over a little bit longer target, but this would be a good target area. But I like to see this zone go away first before I took that short.
Right. Well, this one would be this is a long, if I believe.
Long, yeah.
Yeah. This is a long.
Well, we have 1, 2, 3, 4 zones, and we have. I thought we determined this was a down move.
No.
All right, let me double check this here.
Here, just see the when you zoom all the way out.
Okay, 1, 2, 3, 4. I have 1, 2, 3. I got 4 on the top, 3 on the bottom.
Oh no.
What do you have?
Well, I got 1, 2, 3, 4, 5. I got 5 green zones and I got 3 red, 4 red.
Excuse me, guys, are you sharing your screen? Anyone sharing a screen right now?
Give me a sec here.
You stopped sharing. You know, we ran into this yesterday. In fact,
here.
Brian and I ran into it yesterday afternoon when we were talking.
Yeah.
Is that so?
This is what I got, my friend.
Okay, you're on a 15. Yeah, yours is different. You're on a 15.
Mine looks like Matt's.
Really?
Yeah. So here's my concern with this whole run. Okay, you've got a really strong move up. You got a big pullback, and now you're in a whole bunch of consolidation, right? So I think what Al was saying, more or less, you're either going to want it to move out of here, or you want it to come up here and maybe look for a different entry. But right here, you're too close to the red zone to even consider taking this, because this is a really strong area. And because we're making lower highs, and this is actually, if I zoom in just a little bit, not overly zoomed in, I can draw a nice little trend line here. If I
at the top of that green zone, that's under where so you've got the short. You have a short little red one, correct? And then you have.
Yeah.
Are you in a green zone right now? Is it looking at like it's
no.
in a green zone? So you're not seeing the one that I'm looking at.
No. So let's see your screen.
What's the price of the green? Go down to right
the green
there.
zone.
What's that price?
1.90003.
British New Zealand. Am I on the same? No, I'm on a different chart. That's why. You're in British New Zealand. I thought it was. Why did I get on this one? Okay, well
you're probably still looking at my chart, maybe.
Oh gosh, no wonder I'm going to go nuts here.
Yeah, well, no, but there are instances where different brokers are gonna.
Yeah, we had that yesterday. Now
somebody in the chat said that they have 3 even zones. So
now mine looks more like yours.
Yeah.
Yeah.
So.
Right. Now mine looks like yours. Okay, but anyway, here. So
either way, we're too close, right?
Either way, it's not going to work. Either way, it's not going to work. Yeah,
we're too close. There's not enough room. You don't want to be hoping and wishing. There is a nice, real strong wedge here, but there's. I would potentially wait for something else to happen. This is not optimal in my book.
Yeah, so here's the arrow.
I'll stop sharing, and you can share your screen now.
Oh, there we go. Let me do that. Let me find my... Let's see. Where did you go? Where did my cursor go? Where did my share screen go? That's what I'm looking for.
You only have 6 screens, right, Al?
Yeah, but for some reason, I could probably use one more, I think. Here, for some reason, I'm not... Oh, there it is. It's hiding, I think.
We've got another alert.
Yeah, this is the, well, we already said this one wasn't a go. So let's go to the Euro US is what this one is. And we're going to go to the Euro US. And we're going to.
Euro Swiss, is it?
No, it's a Euro US.
Euro
US. Came through.
Euro USD.
Oh, that means something's wrong on mine then. I got Euro Swiss.
USD. So here we go. We're going to pull this one up. And it was a sell, Euro USD sell.
Charles said both came through. Okay, so maybe there's no Euro Swiss chart. No, Al has a Euro Swiss chart.
Euro
so
US, Euro USD. I've got a Euro US, and there's a US Swiss. I'm seeing at 12:59. I'm seeing, which is like 2 minutes ago. Looks like a Euro USD.
Yeah, I'm seeing only the Euro USD as well, even though I have a Euro Swiss chart. Yeah, I don't know how.
Okay.
And it's a sell.
Well,
maybe it'll be fixed up with the new release this weekend, this type of stuff.
I'm looking forward to that.
Yeah, me too.
So
we've only got 3 pips to the zone. We have 1, 2, 3, 4. Right now I can see that it's more of an uptrend. And I'm just going to zoom out as far as I can. And I have 1, 2, 3 red zones. I've got 1, 2, 3, 4, 5, 6 green zones. So we have a down arrow. We want an up arrow for this, and so this is a no trade. And I'm going to put an up arrow right inside that zone. So that way, if that zone goes away, I'll see where it was marked before. And we know that we have an up arrow right in this area.
Let me check this out here.
There's a zone right in there. And that's no trade. So that was the Euro USD. We had a US Swiss. I think we already talked about that one.
Yeah, we talked about that one.
That's a down arrow, I believe is what we decided on that one. Let's double check that, zoom out. I see one real big red zone followed by another red. So we got a small little red zone that it does have a down arrow. And so we're going to zoom in. And you can see where this thing came right on up, wicked in here. Let's move this over just a little bit if I can. And this was where we were saying, I think we decided that we wanted a down move. If it came up here, took this little zone out, came back up, or if it gives us a down arrow, but we know there's 20 pips between my blue line and my green line. So right in here, you don't have the range right now. Where the price is, you're right in the middle of this range. There's not enough room to the downside nor the upside. And again, this is a lot of the type of action you can expect to see on a Friday after some rather large market moves during the week.
Oh, the Euro Swiss came up on the 1 hour, Ken is telling us.
On the 1 hour?
Mm-hmm.
Mine said 15.
So that would be more of a swing trade. Euro Swiss.
Mine showed up on the 15-minute chart. So I just find it a little...
I see one back around 30 minutes ago.
It's not the 13th today, is it?
I don't know. I'm not very superstitious.
Well, me either, but still.
Yep, you have to watch out for that January 22nd day.
That's it.
All right, so right now there's nothing here. The zone's still here. Like I said, I like putting these arrows right on top of the zone or right beside the zone. So that way, if I have an arrow and there's no zone there, I know that zone's been penetrated. And so we wait. Any other questions or topics of conversation that anybody would like to address while we're sitting here quietly waiting for the next trade? Let's see if there's any. Let me check the chat here.
Oh, okay. I like that. All right. Let's maybe we can talk about so you're saying that you think you made more pips than what your account is actually showing you dollar wise?
Who said that?
Okay. The question is, I'm trying to understand my account set on bit, but from the pips made it does seem that the account adds up to the amount of pips showing for profit.
Yeah, if you're talking about this pip counter right here, if you have several open trades, this pip counter will total all the pips that you have open traded. If I had some couple of trades there, they'll have the pair and what the pip count was. So that way, if I'm on another chart, I can actually see what trades I have open, what they're doing while I'm looking at another chart, which is really kind of a nice little tool. And that will give you the total overall plus or minus pips that you're in your open positions.
Yeah, it's not specific to the currency pair that you have open, which I found out yesterday during our call because Jackie had shared her charts, and then I saw 800 and some pips, and I said, well, the price on this currency pair didn't move 800 and some pips, and then I looked and it was her oil trades. So it's your whole account as a whole that shows up as the arrow pips. That's a great question.
Lorraine is asking, so is the pound CAD retesting?
Is the pound CAD retesting? Let's take a look at that. This out of the way, pound CAD. So let's go back over to that. Make that.
Yeah, looks like
this
it.
one small. Pound CAD is a retesting. Actually, it looks like it probably is retesting this down move.
Mm-hmm.
It's retesting the bottom of the wedge. You also see where the moving average, see how flat this moving average is right now? And so it just tells me it's just kind of going sideways. From this point here, let's see how much room would we have to the downside if we, really we have an up arrow. The strategy that we're looking at, if it did break the bottom, this trend line, you would have room to the 20 pips to this area, pretty close. Yeah, there's about 20 pips right there. Am I going to take this trade? No, it would be a contra trend trade because you have an upward move. I would not take this just because the rule says that we just wait until we get clear sailing and 20 pips in the right direction of the trend. This could qualify as a contra trend trade. I'm not going to take that. But yes, that would be, you'd be much better off trying to take it down here. Now, if it came back up and if it maintained this trend line and it came up and you're able to get from here, see from this, here's your 20 pips. Now, as this thing gets further down, you can see this trend line is getting further away. So the more, as it comes up to this direction, you could probably still get your 20 pips if you could get a close above what I would call this line right here. But just keep in mind that where this blue line is, there is a little bit of that is sort of a bounce point.
All right, so we got a great question in the chat there about the platform that you're using, Al. I would rephrase that by saying what broker, more or less, because it depends on the broker and the broker feed. Depending on the broker feed, I may have a red zone there, but Al might have a green one because of the broker feed itself. Now, there was also something mentioned during the call yesterday that if you do change your time zones, sometimes the zones don't repaint properly, and that was a bug in the programming that was mentioned that should be resolved within version 3. But if that does happen, if you do change your time frame from the 1 hour to the 15 to the 5 or something like that, remove arrow from your chart itself and then re-add it again so that it displays properly, because that could be happening as well.
And one thing is, this Hawkeye session, we started off we've been around here for probably about 5 months now, I guess. And we started off doing wedges, talking about wedges. And when we talk about the wedges, we're going to talk a little bit about some of the technicals of this, trying to keep it as real straightforward as possible, especially while we're waiting around. But this was brought up a really good point that mentioned about the bounce off of here. You can see where we have a low here. This was yesterday's money zone right here. You can see where it's a shadowed area. We have the top of the zone, the bottom of the zone. This is a major pivot point. And if you go and you connect these pivot points, you see if you take it from here, so here's your anchor. Up, you get into this zone, you have a little bit of hit. It probably goes all the way down. Actually, if you were to take this thing all the way down, if I can grab this thing, it's probably the bottom of that wick is right about here. And you can see where here's an anchor. Here's a test. It tested the trend line here. That's a hit. That's a hit. This pretty much, when you get 3 hits on a trend line, that pretty much validates that trend line as a major bounce point. Same way up here. This is the top of the money zone yesterday. Came up. You have here's your anchor. Here's a hit. Here's a hit. Here's another one. Here's another one. So you can see that the price is respecting this trend line. This is your wedge right here. This is your bigger wedge. And right now, just looking at the prices are bouncing, pretty much going in between all the way here up until it gets to the end of the wedge. And then eventually it's going to break either to the upside or to the downside. And that's where but right now it's really confined. And as you can see, the confinement is going to get narrower and more narrow all the way till it gets to the end. If we were to take this, measure this wedge, Matt mentioned it yesterday. If you just measure the point from here to here and draw a vertical line and then move it to wherever this thing breaks out of the bottom of this, that would be your target. I can illustrate that a little bit easier on a different chart if I can pull that up.
Yeah, because you got two realities there. Number one is based over a volume of trades and whatnot. We noticed that 75% of the time, once it breaks out of the wedge, you'll realize that it goes the length of the stick, so the width of the wedge of the break. So Al's going to show that. It's going to be very, very clear. And so there's two take profits that you could do. You don't need to go for 20 pips. If the width of the wedge is, say, 30, you can take. Yeah, go ahead.
Can you see my chart here?
Yes.
Yeah.
Okay. This is the. I'm going to draw this. This is my trading view chart. This is what I really like using for my technical analysis. And I'll just draw a little trend line. This was the bottom of the money zone from yesterday. Here's the top of the money zone, same points. And we're just going to take it from here to here. And you can see how it's getting more narrow over here. Here's your wedge, and right now it's bouncing back and forth. You also can see that it's, we talked about the M's and W's. Well, if I look at for an M and W, I like this little tool right here. So here's the up move coming up to, this is the first leg of the M, comes back down, pulls back. Here's the middle of the M. If it comes back up, now ideally, sometimes you'll get, when you get the break, you see here, if you look and see this point right here, there's your M right here. Now we don't know, ideally for one of the strategies that we talk about is that we want this little C, the level where the C is, to be slightly lower than where the A is. And right now it's pretty much, you can see this little wick right here is pretty much right level with the A. So this is actually what would be considered like a double top. That would still qualify. Now if it were to come down and break the bottom, then you'd be looking at the last leg of the M, which could be anywhere from here to, from wherever the break was to, I usually like taking this, and you see right now, this is like this is the main range. And I like bringing this target area down just a little bit above where the X is, right about in here. Now we talked about these sticks. And this is just the price action analysis of what we like to try and talk about. Trying to keep it simple. And if you don't understand everything, just keep watching, because eventually you'll get the hang of it.
Hey Al, when you get a moment, we have a very special guest with us. If we could bring her over as a panelist as well. We got Coach Mo here.
Oh, hey. That's perfect. Great. We'd love to have her.
Yeah. I just can't move her over for some reason. Okay. No, I can't.
All right. Hang on. Let me.
Yeah. If you can bring her over.
Revoked.
Well, I don't know. It's since they set up the new rooms, the links have been broken, and it's technical challenges that happen. It's growing pains. So
it is.
We do what we can do.
So here's the. Now, if this thing were to break out, this would be, if let's say we break out right here, this would be the target right in this area right here.
We got a Euro Swiss, guys, just FYI.
Okay. Euro Swiss. Okay, let me move this out of the way and let me find Coach Mo and see if I can find her here.
You see what's ironic is where you put that potential breakout and where you had your target of the tool that you drew that's just above the X, it's the same spot, guys.
Oh, see, British New Zealand.
Euro Swiss.
Euro Swiss?
Yeah,
no,
Euro
I've
Swiss.
got British New Zealand. This is the last one. Or my
No, we just had one now come through.
Euroswiss. Okay, Euroswiss. Okay, yep, I see it. Euroswiss. And Coach Mo, welcome, Coach Mo. We're glad to have you here.
Welcome.
Hey, we're so glad to have you. It is. I know it's mountain time there, and I really appreciate you waking up extra early and taking time to show up.
Yeah. Hey, you know what? When God calls you, he calls you. He just woke me up just so gracefully, and I was excited to get up.
Oh, that's fantastic.
Yeah, buddy. So I actually heard you guys talking about like how certain people had, more zones than other people had. Is that correct?
Yes, ma'am.
Yes.
Okay. And then are you guys all using the same broker?
No.
For the most part, I think that's where we were finding the difference. I think yesterday in the room with Dante, he had a chart, and we were on different brokers, and that's where I think the difference probably lies.
It is absolutely where the issue is, and that's not going to change with version 3. I had a long conversation with Nathan, and it really is the painted zones, and what we are seeing is all determined by the broker that we're using.
So are the broker feeds that much different?
Yes.
Wow.
Well, listen, Al, you and I both know there's a huge difference between the feed you get with an A-list and a B-list broker.
I know, but we're both using A-list brokers, though.
Yeah.
That's
But
the point. That's the point. That's a little
Or the
disturbing.
liquidity provider as well can be a little different. Like myself, I'm using NVFX. And you can see Al is using Lucor or LCMFX, and some people are using IC Markets, and other people are using Hugo's Way and whatnot. So it's going to vary a little bit.
Well, and a lot of these zones come into play through Wix.
Yes,
and that's
ma'am.
all broker driven, right?
Right.
That would make sense. So I guess then the question would be, is that if we're looking at a price movement, and because we're probably looking at most of the time the charts are really close and pretty much the same. But does that would that give us rise to just trade your own personal chart that you have with the broker that you have? Or are the pips that close to where sometimes if a zone might be a little bit iffy, that you could say, well, Matt doesn't have it there and I have it there, that maybe that could be a deal breaker if he trade to take it in the to go and take the trade or not take the trade. I guess I don't know the answer to that one. I guess that's something we just have to play around with as time goes on here. I just discovered this yesterday.
Do you mind me chiming in?
No,
go ahead.
Do.
Yeah, please do. Hey.
So I've been doing a lot of testing, guys. I trade all throughout the day if I can, just to try to dispel or test certain theories. So what I would suggest is, if there is, like, we're talking like crazy momentum, obviously, trade with what your broker is telling you, right? So if the painted zones are painted in an upward trend, trade buys. If they're painted in a downward trend, trade sells, right? There has to be momentum in the market. There just has to be, because this is a momentum tool, trading tool. It is not meant, like, you know how slow it's going right now?
Yeah.
I trade indices and I'm like, oh my gosh, this is snail mail.
Right.
So if it's not moving very fast, I would say caution. Like, before you even put in a buy or sell, if it's moving super slow like it's doing right now, I would really, really just caution anyone, trying to bid against their better judgment or what they're seeing in front of their eyes, because it is a momentum tool. That's the reason why some of the people I've been coaching, they're like, I took an arrow and it said, to sell, and then it went straight into buy. And I was like, well, how fast or slow was the market moving?
Yeah.
Because that will tell me whether or not you, number one, it might have been a valid, strategy one bag entry. But if the market is not moving very, very fast, it could be tricking people up to think that it's going to like a sell or buy, but it really is just tricking people out of their trades. You know what I'm saying?
That's
So
really
just
good
be
advice.
careful of that. Like if it's moving as slow as it's moving today, like right now, I'm just scalping dollars out of the market. Because
you're not waiting
I
for that
test,
20 pip
with
move.
indices, I point 0.001,
Yeah.
And that's just because I know how fast indices move. And this is not it. Not this morning.
And you figure we're in the middle of the London session, about ready to open up with the U.S. session, and you can see where in this whole money zone, this thing has only moved basically 16 pips on either side, and you would have to get the exact entry down here, exact entry up here to go, just to be able to get your 20 pips out. And I mean, this would be maybe a scalping area, possibly, I would say,
right?
But you'd have to be very dead on with your entries in order to even do that.
Right. Exactly.
So yeah. When I see these zones like this, it's just, I mean, this is all, I mean, it's just not going. I mean, here's about as low as it got right here, and that was pretty deep into this. But that's what formed this. This area is what formed this green zone. This up here is what formed when that pool came out. This is what formed this red zone. But you can see it's just been bouncing around. I guess to get up this high here, but it hasn't really done much of a move at all over the last several hours. Right. And actually, that's since yesterday. You can figure it's been saying in this range all night last night. Here's the end of the money zone. Yesterday's New York close. Here's that black area where there's really very little activity. And in the biggest time of the day, which is from London to New York, it's only gone 16 pips. So yeah, and that's why this is a no trade.
Right.
Thanks for that input there, Mo.
Actually,
Yeah, 'cause
just
this is
quickly
all-
back to the zone. There was a comment in the Q&A by Brent, which makes a lot of sense as well. He says that the brokers really aren't that much different. It's just that there's a threshold between there being a zone / arrow and there not being one. In other words, if there's just a pipette difference, that could be the threshold that triggered the zone in the first place. So that makes a lot of sense that, like just one tiny little movement, all of a sudden the algo will make a zone for us that we otherwise wouldn't see. So
yeah, and we don't want to read too much into how the zone was formed or why. I mean, that's all part of the algorithm, and we don't really need to concern ourselves as to why it did or didn't get formed. We do care, is it there or not? That's really what we're looking at. We're trying to keep it as simple as possible.
Yeah, I think it's just to put people's minds at ease that if one person sees a zone that the other person doesn't see on the same chart, same time frame, that it's okay. It's just a matter of a slight variance with the movement, the price movement. That's all.
And it might be a good indication that maybe the zone may not be as strong as you might think it is. If it's that different, whether it's there or not, it may not be that big of a deal overall with the overall price of the market, whether or not it's going to work or not. I don't know. As Dante said yesterday, and I think, Mo, I don't know if you agree with this, whatever's showing on your charts, that's what you should probably trade.
Absolutely. Yeah. Absolutely. And that's what I was saying earlier, is listen to what your broker is telling you as well, right? Yeah. Because they're the ones who's going to allow you to cash out.
Yeah, that's right. They're the ones that are still holding. They're the ones that are still holding the purse strings.
There you go. They were holding the purse strings yesterday for me. Oh my gosh.
Oh yeah.
Every time I would go into like a positive, they'd be like, "Nope, we're gonna freeze your screen." What?
Yeah.
Oh, that's crazy.
Oh shoot.
So we got two questions for you, my friends. We're getting questions about when is your indices class, or when you're going to be teaching your strategy.
Oh, I love y'all. Oh my goodness. Okay, sorry, I get all sentimental about this kind of stuff. I love teaching.
I can tell.
As far as indices class, I'm just going to be very, very honest with you guys. I'm going to tell you exactly what I tell everybody I coach. Master strategy 1. It's that simple. Like
Yeah.
even Nathan is trying to figure out what the heck I'm doing. I said I'm following the bag entry.
Yeah.
I'm following the bag entry.
And you're doing it on
Now,
the indexes? Is that what you're doing it on?
say
Yeah.
that again, my love.
And you're doing it on the indices?
Yeah. Oh
Wow.
yeah.
Okay, good.
And that
On
is
the
the
1 in 5 minute, correct?
Yep, 1 in 5.
Are you
1 in
you're
5.
doing the
Matter of
S&P?
fact, most of my time is spent on the 1 minute chart on indices. I would caution you guys on that.
You need to know what you're doing if you're playing 1 minute indices. Like, you're not going to
Yeah.
walk in here as a green trader.
I
Guys,
I know, right?
don't
and being
think
successful. Like yesterday, I pulled out of the market $3,500
hey, come on, Mo.
yesterday, and that was outside the money zone. But I will tell you, I caution people when I do my coaching because number one, I'm not your average person. I literally the way my brain thinks, I'm more of a Nathan, right? So my brain is always calculating possibilities, right? So yesterday, had I not made some, like we're talking about split second moves in the marketplace, I would have like just demolished my account. The moves that I was making out, it would have just disintegrated. My account would have been gone.
Yeah, but that's what you're comfortable doing, and you've got. We talked about this yesterday. You've got your system down. You've got a volume of trades. You know what your win rate is. You know what you're getting into. For someone to say, "Oh, I want to follow Coach Mo, but I've never traded Forex before, and I've never touched indices." Hey guys, sit down. Get into the basics first, understand the foundation so that you can build on the foundation. If you start jumping into something like indices with a 1 minute and 5 minute, guys, it's going to dust your account. You're going to get frustrated. It's going to be a hard go because you're not at the point in that road where you can take that turn. You first have to start at the beginning, and you're going to get there faster than anyone else, okay? But there are steps to getting to where Coach Mo is. It's super critical, guys, because we talked about it a little bit, that it was a minefield. Forex is a minefield. Well, Coach Mo is pretty far down that road into the minefield. But she knows where she's going and she knows what not to go into. But if you're just starting and you're green, and I mean green like you haven't taken 100 demo trades or 50 demo trades, okay? If you haven't gone that way, I would highly caution you from getting into something, trying to scalp on the 1 minute with indices, because to me, that's outside of my comfort zone. And I'm looking at it. I'm like, ooh, you know what you're doing. And this is interesting, but I'm not there yet. I'm going to stick to what's working for me. And what's working for me is the bag entry, number one. That's where the foundation comes in. That's where everything's being, because if you don't build the foundation right, the rest of the building's going to fall apart. Right, Coach Mo? Amen. Yeah. Like, and you can't skip on the foundation work. The foundation work takes a lot of work. It takes a lot of time. You got to put in the work to have the solid foundation that you need to move on. The worst thing you can do, and this is a disservice to everyone, is to go and jump into something more advanced where you're not ready, you're not comfortable, and you're asking questions that should already have been answered in the previous areas. Like, and we got some alerts here, so we'll hold on there, and then we'll answer some questions after we analyze these alerts. How about that?
Looks like we have a New Zealand USD followed by a British NZD.
Hey, that's that short we were waiting for, Al.
The British CAD?
No, CAD. NZD USD.
NZD. Let's go take a look at it.
I think that's it.
British USD. Or
New
British.
Zealand USD we're looking for here.
Yeah.
New Zealand USD is going to be over, where to go? New Zealand USD right here. We were looking for a, let's see, we have.
Oh, that's GBP NZD. Why am I seeing all these different things? Sorry, guys.
So we're going to scale in. We got 1, 2, 3, 4 red zones. We have 1, 2, 3 green zones. More red than green. We're looking at a down arrow. Looks like to me it's going to be one of the same situations where it's in a little bit of a zone. Let's scale out. Let's see if we can expand our chart here a little bit. We're still in the green zone. In order to, once we break the green zone, we're going to have, we would have 20 pips once it breaks the green zone, but on this arrow right here where the price is, we've got 170, 71.72. So let's just 71.72. That's the last, get this thing up, open trades, 0.7172. That's right where the line is. So here's our entry, here's our target. We do have room, but we're right in the middle of this green zone, which for me, that's a disqualifier. If we can break through that, if we can get perhaps if we can get a break, come back and retest that with a little bit of a pullback and maybe retest this trend line up, this moving average, then maybe I'd be willing to take it. Or we get maybe a little bit more confirmation that this thing's actually going short. What say you, Matt or Mo? What do you think? Or Eva? What do you think?
I got a couple.
So
Go ahead.
I was just about to say, I would actually agree 100% with everything you're talking about. As far as that trade is going, guys, when you guys were talking about this Forex thing as a minefield, yes. Yeah. It's all about mastering. There's a famous saying from my favorite book, and that's the Bible, and it says, "Know thyself," right? So what it's saying is to master your emotions, master your thought process. Thoughts become things, right? So really, when you're in these markets, you have to have like perseverance as a lion in the wilderness staking its prey, right? They crouch down and they wait for the right moment. This is exactly, we got to be a lion or a lioness in this game. You have to be patient. You're not always going to get into the markets, and I'll explain. Like 2 weeks ago, I was able to pull 21K out of the market, right? I probably could have pulled about $350,000 after I did my calculations on the Fibonacci. But
there we go.
When it comes down to it, it's about patience and knowing yourself, right? So if you're not okay with taking a loss, that day, don't get in the market, right? If your emotions are telling you, oh, I can't afford to lose money today, even if there is a setup, don't get in the market.
It's interesting you should say that, Mo, because as I was laying in bed this morning thinking about what we were going to talk about in this room today, and just thinking about some of my trading past and my history about where I came from. The thing that I find to be, like I said, trading anything, whether it's a Forex or options or stocks or whatever, it's like sitting on a three-legged stool, and you need all three legs to be on the ground in order to not fall off the stool. And that three-legged stool is, you have the money management aspect, which is pretty easy. That's pretty cut and dry. You have such a big account, you're going to risk so much. You know how much to risk on the trade. That one's pretty easy. That's pretty cut and dry. You can learn the technical analysis, and you can say, well, if this pattern happens, I'll take the trade. If it doesn't happen, I won't take the trade. And then there's those other little gray areas which plays with your mind. And that's really the emotions and the mind game. That's really the toughest nut to crack in being a successful trader. And I think until you can understand how your brain works and how your emotions work, it'd be very difficult to be a successful trader until you really understand that. And we used to call it the BTE indicator that you can and that's that indicator between your ears, your brain, your emotions. And that's really the toughest thing to to crack as far as being a successful trader. But you can do that with volumes of trades, as Matt often talks about. It's learning the technicals as you get more comfortable, having an expert advisor that you trust, and just believe that the work's been done, and whoever created it has done their homework. But you have to stay within the rules, because if you start changing the rules, what you're doing is you're programming your brain to say, okay, it's okay to break the rule this time, and it's not. Thoughts about that in the rant?
Oh, I love that. I love that. Because like I told Nathan, because he DM'd me, he's like, how are you doing this? Coming in as a, I call it fresh meat in the marketplace, right? And I said, dude, you created the best software system known to man in this field. Like, I say, when I first started trading, I stayed on my charts quite frequently because I needed to, test the theories that people were teaching me, and I 100% agree with everything you just said. I'm going to go back to something that you said before to give people a better analogy regarding that solid foundation, right? If we are building a house, has anybody ever poured cement before?
Yeah.
It takes a while for that sucker to settle. Okay. You're gonna pour the cement, which is the Arrow software, and coming to your charts every single day and practicing a bag entry. So I'm going to say this, and I have to put a huge disclaimer on this. Okay. If you're going to trade the bag, trade strategy 1, right? And you want to get more practice in strategy 1, the people that I coach, I tell them to go to the minute chart on every indice, okay? US 30, NAS, S&P, or the 3 me and Jackie trade, all right? Go to the minute chart and practice in demo only. Demo only during the New York session, okay? Bag entries at a 0.01 on a demo only account. I can't stress that enough, because you're absolutely right, Matt. You can kill an account in 2 seconds flat. If you go into the minute chart on any one of those indices and just sit there and just practice the bag entry, watch how effortlessly, in my personal opinion, okay, typically Tuesday through Thursday. Mondays, I can't pull money out of the cloud. I call it the Forex cloud. But typically Tuesdays, Wednesdays, and Thursdays are my bread and butter. You're going to see why Arrow is so powerful, right? And on demo only, you're going to be able to instill in your brain and remap your brain to see bag entries all day long, and to be able to dissect the market literally just by looking at a chart and being like, nope, even if I did get what looks to be like a bag entry, I'm not taking it. Why? Because you programmed your brain long enough to see strategy 1 and see how, like, even, for example, the indices move and when it's a valid entry and when it's not a valid entry. It's just like, I think, Matt, you seen on Tuesday's call I was on? No, I was on Wednesday's call.
Yeah.
Because no one sent me the link for Tuesdays.
Oh, unfortunately.
It's okay. On Wednesday's call, I was showing you guys, there was literally, and even after the call, there was a couple more during the New York session, there was literally 8 bag entries on US 30. 8. I could win all 8. I was watching awesome. My grandson, so I wasn't able to get in there, but literally all 8. And then there was one that was a false bag entry. And the way you would have been able to tell that is by zooming out just a little bit, enough to see that there were dark green candlesticks surrounding that upward arrow, because we were in a buy trend, and you would have lost that one trade. But I'm telling you, I would have won all 8. Okay. So I was calculations, and that's money, people. That's money. So if you want more practice, because like Matt was saying, you gotta swing the bat at least 100 times in the market. Come on, at least 100 times, swing the bat. And if you need more practice because the E pairs and G pairs are not giving you, your bag entries, and you may get 1 a day, maybe 0 a day, then how do you continue to keep practicing? You get on those indices in a demo. Say it with me, people. Demo only. Demo only. And you practice in the M1. And you practice in the M1 off the bag strategy. That's how your mind will be remapped to see those entries almost nearly effortlessly.
So you're saying you can hyper accelerate your growth by going to the 1 minute on the indices? Is that what you're saying? You're giving us some secret?
Bro, that's my secret sauce.
What was your question, Matt? Sorry? What did you just ask? I missed it. I was reading.
No, I was just making a statement. I was saying that she just gave us a way to hyper accelerate our growth with the bags. That's intense. Yeah, it's exactly what she's going about. Neuroplasticity, really powerful. There's so much value. I love listening to her.
Mo, some people are asking, can you please repeat for them the indices that you are trading?
Absolutely.
There's also another question related to that. What balance should you have in your account to trade the US 30?
Ooh, a minimum of 1,000 US dollars, depending on where you're at. A minimum. And again, like I'm going to go back because that should have been the question that they should have asked. And the reason why I say that is because I had already prefaced my statement by telling you have to go and practice on a demo account. Okay. So anytime you practice on a demo account, the second rule of thumb is practice with a balance that you are going to be closest to putting into your actual live account. Okay. So with that being said, oh, that's pretty. I'm sorry. I'm noticing you guys were talking about wedges and I just realized there was a wedge on US 30 on the minute one. And it broke on the upside. Oh my goodness. Okay. Sorry. Now I'm going to start looking for wedges.
Yeah. It's interesting. We'll talk later more about wedges though, but
yeah,
it's going to blow your mind.
Oh, I can't wait because now, I mean, I had a theory that it was going to break on the upside, and it was interesting because it actually did just that. So it's retesting. I also use the Fibonacci, guys, and so right now I believe it's retesting the 50 mark. Hold on a second here. My fib on here? Last night it was, and now I don't know what happened. Oh, that's because I threw on a different arrow V2 pattern that I have. Okay. Anyways, sorry, I'm talking out my trades. I love talking out what I do. But yeah, the real question. Let's go back to the question that was put into the Zoom call. The real thing that you should be asking yourself is when you're practicing in demo only on the indices, which I told you guys is US 30. Okay. So that's the Dow Jones. You got NAS 100, NASDAQ. And that can on your broker, that could be NAS 100 or Tech 100, US Tech 100. Okay. So that could be that, or the Dow Jones would be DJ 30 or US 30 on your broker. And then I haven't really traded too much of the German 30. Is not necessarily my favorite, but I do know that some of the traders I rock with love the German 30. And then which one am I missing? S&P. Right? S&P is literally Jackie's bread and butter, and that's her sauce. I normally err on the side of US 30 and NASDAQ because I like to see those clean lines, right? US 30 seems to me in my brain, it doesn't comprehend choppy, right? And when I go into like the lower time frames on S&P, it's just choppy. It's like one bar up, one bar down, like a gazillion pips in my mind. And I'm like, I don't understand that. But Jackie does. So I'm going to get more practice on a demo account with S&P. But yeah, my bread and butter is NAS 100 and US 30. That's what literally took me from being a novice trader to now I can go into the market on pretty much almost any given day, Monday through Thursday, and minimum pull out the market $1,500 plus, on my funded account. So hopefully that helps you guys. Any other questions so that I don't continue to keep rambling? Because I love this stuff. I mean, I could keep talking.
This is awesome.
I'd like to show a little bit with what we were talking about, this trade here with the New Zealand. Let me see, my mic on? Yeah, it is. Okay. We were talking about this trade with the New Zealand USD. Remember I said that I kind of see it break the bottom of, you can see that with this candle, it came all the way down. It didn't take out the zone, but we did get it went down, it came back, and now right now it's retesting where that entry was. Now, the thing is it going to keep on going, or is it going to break out? If I did take this trade, I would, in fact, it came down and almost closed out, broke through the green zone. I would be more apt to say on this pullback, if I wanted to try and get in this thing, I just put a sell stop in, right? A couple pips below the last low. And that way, if this thing comes back and retests this blue line and decides to break through, then you've got lots of room to the downside to get you 20 pips. Again, this is a Friday. I've already got my daily bread for the week. As Matt told me one day, he said, just go and get your daily bread. To try and get those few pips a day that you want, get your target pips, and then just put it aside. And then if you do it, then practice or do something like that. But don't get greedy. Don't be taking trades that are iffy. But have a plan that if you wanted to try and take this trade, then I said I would not do it. Now that it came back down, it broke through the line. Now it's coming back and retest where that arrow zone was. And then you can see if it decides to, this is just a small little pullback and starts trending, you'll be in the trade. But if it doesn't, if it goes in the opposite direction, you're not in the trade. And that's all I have to say about that.
I love that. Can I chime in on being greedy, right? Again, know thyself, right? Going to the markets with a plan. And that's the reason why I'm trading pennies on the dollar, today, because I've already hit my goal for the week, right? On my funded account. So it's one of those things where you don't have to go in every single day and feel like you have, oh my gosh, I have to trade. If you feel like that, go on a demo account, right? Because when you're so thirsty, sometimes you make impulsive decisions that will end up just sucking the life out of your account. That is not what we want. We want to see you win, right? So master your emotion. If you're feeling antsy, don't go into your live account and trade on your live account. You need to be in your demo, because when you're feeling antsy, like I love what Matt said, is you're on a 3-leg stool. And if you're missing the one piece of that stool that is your mindset, the most important part, in my personal opinion, that's the reason why Forex markets can actually eat you alive. Most people are not successful in Forex markets because impulse, right? Oh my God, I have to win. I have to, $6.6 trillion is traded every single day on the marketplace. Oh, I gotta get $100. I gotta get 1,000. You don't have to do anything. What you need to do is practice the one strategy that has been making me and so many other people win, and that's the bag strategy. That's what you need to do, because the money will come. The money will come. That's just the reward of your discipline, right? The reward of your discipline and determination to literally get in the game and practice. Matt, I'm the one who brought up the whole analogy about wanting to become a pro, right? You want to become a pro baseball player? Do what the pro baseball players started doing. That means that they practiced in Little League. They practiced throughout elementary, middle school, and high school. Okay. According to the book Outliers, it takes you 10,000 hours to master a thing. And Forex, we already know there are people in this game that have been doing this for 20 years. People in this game that have been doing it for 30 years. People in this game, and we're talking about this wasn't just like created in the last 5 years. Okay. This has been around for literally decades. And you're coming in as a novice trying to master something that the pros have already mastered, right? So if you want to become a pro, you put in the pro time, you put in the practice. And that's the reason why I always tell people, you want more practice and those E pairs and G pairs aren't giving it to you, go on the indice minute one chart and put in the practice on the bag entry only and watch how many times you win. Watch how many, it's like, it's, let's just put it as it's too surreal. Like when I'm on those minute charts and I'm like, you got to be kidding me. I won how many times? I mean, just even looking at, let me see if I can zoom out. Let's see, we're in the money zone. Trying to look. There was 1, 2, 3, 4 clear bag entries on the S&P. 4 clear bag, and y'all heard me. 4 clear bag entry.
4 of them.
4 clear. I mean, bright as day. Let me see if I can see US 32. Let's see here. Let me zoom out. Let me put my clear.
Actually, while you're doing that, Mo, I've got a couple more questions for you. How many pips do you go for on the Dow? And it says pips for the 1 minute or 5 minute on indices.
Oh, great question. Because actually that was something I was going to touch on. A minimum of 25 pips. The idea is to get 50 to 100, right? So as you continue to practice, so here's the crazy part about indices, okay? The way that they move, and this is why I don't like Fridays. Fridays are trick days.
These are trick days, you say?
Trappy.
Trappy days? Trappy days.
Yeah. But I call them tricksters because you'll be thinking it goes one way and it completely reverses, and then it goes in the way you knew it was going to go. Even though you guys call them trap days, I'm like, oh, you're playing tricks on me. Tricks on my mind. But even before one of my zones disappeared, there was literally 1, 2, 3, 4. There was 4, same thing on US 30. So the Dow Jones, there was 4 bag entries on the minute one that you guys could have easily practiced on. And it didn't take long. I mean, it was probably almost every half an hour to an hour that these moves would happen since, London session began. So if I'm looking at my chart right here, let me see. No, we're in 8 hours in. So let's see here. Sorry, my brain's calculating. So actually it was every few hours it was happening where you would get a bag entry. But at least you would have been practicing the bag entry, right? So yeah, 25 to 50 pips. Now, here's something that me and Jackie noticed is that Nathan's strategy does work as far as it sounds really, really scary. And this is the reason why you don't necessarily want to go into like with a live account, especially on indices, even when you think you have it mastered, is because you can go as easily into drawdown of 150 pips and then it going straight into your direction, right? So the formula, right, on E pairs and G pairs is 20 pip take profit, 40 pip stop loss, right? And people freak out about that. But there's a science behind it. There's an algorithm behind it. It's math behind it, right? Same thing with indices. It's 100%, 100 pip take profit, 200 pip drawdown, And if y'all ever seen 200 pip drawdown, that's like crazy.
Yeah,
So-
you don't want to be in 200 pip drawdown.
Right.
It's not
You
fun.
definitely
It's
don't
not
want to be
fun.
a 200 pip drawdown. But I preface it with this, right? Test that strategy and watch what happens. Because I will say that I have tested Jackie's strategy on the 200 pip drawdown because I was like, no, the most I'm comfortable with is 20 pips. 20 pips and I'm out. I just closed the trade just a second ago because it went into 20 pip drawdown. I was like, nope. The minute you hit my 20 pips, that's all she wrote. But know thyself, right? Know your comfort zone. You don't have to take what anybody says in this industry and be like, oh my gosh, that's facts, right? Because you know yourself better than we know you, right? You might not be comfortable with the 200 pip drawdown. I've tested what Jackie has said, and I've actually seen it actually come to fruition where it'll go on 143 pip drawdown and then shot right up to 1,000 pips in my direction, right? Because I was practicing on what? A demo. A demo. So I didn't have to lose money.
It also gets rid of a lot of that emotion too, right?
It does.
You're observing, and by observing when you got really no not that much emotion in a demo account, you're just observing properly. You can make proper observations because your mind is not clouded with the emotions attached to trading live money.
Right. You know what, Matt? I love that. You know what? I'm going to actually use that in my training because that's actually kind of the position I've taken ever since Arrow came out. Is I'm like Christopher Columbus on my own sailboat. I'm on my own sailboat and I am exploring the land that I have never seen before, right? I'm a business owner. Business owners don't get up and butt crack of dawn trading. They get up at the butt crack of dawn to, master their plan of execution and trying to get the word out there about their business. This is in my personal opinion, hearing some of the panelists that I've heard in the past, I'm a novice compared to y'all, but I'm mastering it because I see it as a fascinating journey, right? I'm in those markets. Like, I'll give you an example. Jackie told me during Thanksgiving week, she don't trade at all, right? She lied to me because she was trading every single day. And that was probably because Thanksgiving was on a Friday, right? But she said, don't trade on a Thanksgiving. Well, at the time, I was using Gearbox. And I just wanted to test her theory. Test people's theories, okay? What may be true for me may not be true for you. I.e. example, 200 pip drawdown, is your stop loss target. 100 pip take profit is your profit target. That might not be true for you. Okay, you might get into your demo account, see that 200 pip drawdown, and be like, "Oh my gosh, I can't. Nope. If this was my live account, there's no way I'd do it." Know that about yourself. Okay, so then if you know that about yourself, my then next suggestion would be then make sure that you're getting as close to a sniper entry as you can possibly. One of the things that I seen in Arrow, and this is called my peekaboo technique. Hold on a second. I'm going to look at your guys' screen. Okay. So I want you to see that, let's say, for example, that zone, that green zone on NZD USD wasn't there, right? We would consider that to be a bag entry because it would have just been, bounced off the zone and then got the down arrow, was below the moving average, right? If that green zone wasn't there. Who's running the screen?
I am.
Okay, go drop down to the M5. I'm teaching you guys something that most people don't get taught until you take my own teaching one-on-ones or group courses. Go to M5. Yeah.
There he goes.
Okay. So I want you to see something. Okay. you got that down arrow. And can you mark your chart for me, please?
I'll
Go
try.
to the M15 and
Go to the 15.
do the vertical line.
Oh, vertical line? Okay.
Go on the M15, and then I want you to mark that arrow on the M15 because I'm trying to show you.
This arrow? The arrow that was on the 15?
M15?
The one that was on the 15.
Mm-hmm.
You get back to 15. It's running very slow here. There we go.
Okay.
Vertical line on this one right here.
Yeah, on the down arrow. Nope, just
on the arrow
candlestick that has the down arrow on it.
This one right here.
Uh-huh.
Right there? Or you want the over one?
And so that says 1430. Now let's go to M5.
Okay.
This is my peekaboo technique, guys. You guys are learning something that's gonna take your trading game to the next level.
Sharing us some secret sauce here.
Yeah, to the next level. Okay. Can you zoom in to that chart for me? Because I want to see something real quick. Yeah. Ooh, yours is weird. What is that?
That's because he just scrunched it up. That's why he just scrunched it down.
Oh no! Can you make it look normal? Because those candlesticks, I don't know what the heck is going on with your candlesticks.
Like that?
Widen up
and so when you zoom in, you can't see what I see. Here, let me
Al,
see.
you know what you just did to make it smaller on your scale here? Can you put it back to the way it was?
Like back here?
I just saw you on your scale on the right hand side, and you were squishing it together, and that's what you've done.
Yeah. Don't squish it together.
Put it back up.
Try back it up there.
There you go. Okay, now zoom in for me.
Zoom in. Make it like that.
Still yours.
We want me to zoom the other way.
It's okay. Yours looks weird, and I wonder why.
Is that better?
Yeah, I'm okay. So yours looks totally different from mine. Mine actually will show like.
Do you want to share your screen?
Green. You see how the next arrow it went down, but the arrow after that went up. Okay, that up arrow would have had a small little thin line of red and then green around it.
Do you want to share your screen, Mo?
Do you want to share your screen, Mo?
Show us what you're looking at.
Yeah, and what are we on? We're on NZD USD. Okay, hold on. Give me a second here. Okay, peoples. Let's it won't let me share my screen.
Here you go. Hang on. Here you go. Now you should.
Perfect. I love you. Okay.
There you go.
Hey guys, we will be getting to your questions. Lorraine's asked a question a while ago. We'll get to it before the end of the session, Lorraine. Don't worry.
Okay. All right. So let's. You were on Euro. Shoot.
It was the New Zealand USD is the one I was on.
NZD USD. Okay.
Yeah, everyone's saying you have a different candle type, Al. And that's
interesting.
Yeah, you see the ones that Mo has clicked is the actually now it's that one there. Yeah.
Okay. All right, cool. So once again, just like pretend this little green zone wasn't here as I'm talking to you, okay? Just so you can kind of see the things that I was sharing. But I'm gonna go ahead and mark this chart again, like I was telling you to do. Okay, and then so once again, it's on 1430, and we're gonna go down to the M5. This is my little peekaboo technique. Anytime you get an arrow, do not jump in right away. Don't do it, even if it is a bag entry. Go take a look at the lower time frames to see what they're doing, okay? And the reason why I say that is because as you see, all right, it took 5 minutes to happen. And let's see here. I'm looking at, and let's go down even to M1. Yeah. So even on M1, let's say, for example, you did take that down arrow, right? And you start to go into profit and you're like, hey, this is awesome. It's going to melt. I would still peek over to the lower time frames because guess what? Lower time frames tell you a story. They tell you a story, right? So when you, and this is where I realized, and I need to still do a video for, I think I did it yesterday, for Nathan because I believe, and this is my own personal beliefs. I haven't 100% been able to test it through hundreds and thousands of people, right? I've only seen it for myself. But remember where he said that people who were testing out the product, they had 80% win ratio or higher, right? So that's why I became like Christopher Columbus exploring new lands. My thought process is, well, if this software is so powerful, what's causing the other 20% of losses? I figured it out, folks. It's called my peekaboo technique. Find out what the crowd is saying at lower time frames. Okay. If the crowd is saying, yep, we're going down, we're going down, we're going down, we're going down, psych. Get out the trade, right? Just get out the trade. Because literally what they were doing is the banks were setting up and the money movers were like, what is it called? Market movers. Sorry, apologize. I'm a little tongue-tied this morning. The market makers.
Yep.
I call them market movers or whatever. They were trying to trick you into thinking that it was going to melt. But in actuality, they were setting themselves up to win. You have to think like you're in the NFL and you're coming in as a novice, right? You're the player that got benched the whole season and then they throw you in the game. Okay? They throw you in the game and you're like, oh, I know the play. We're going to win this thing. And literally defense says, nope, we're taking the ball back, right? Because they want to make money. You want to make money. So how do you protect yourself from those 20% losses? See, it actually did melt. It's starting to melt, right? And it might even go even further. We don't know. But for right now, we got in at that arrow because it was a bag entry and we're wondering why we're losing. Take a look at the lower time frames. I promise you, they'll tell you a story. Okay. Even if you get into, let's say, for example, you did get into that bag entry, right? I still, during that time, as long as it's in profit, obviously, you're going to be like, yes, this is great. Right? The minute it starts reversing, I would go say, okay, why is it reversing? And do I feel comfortable enough on these lower time frames to continue to keep playing this game? Right? Because even on the M5, it's clear as day. It went down for 5 minutes. It straight went up for 20. You see what I'm saying? This is my peekaboo technique. This is what 9 times out of 10, I can help myself. Now, let me preface this also as well. On the US indices, when you're on that minute chart, there is no peekaboo technique, right? There's no way to look at a 30-second chart or a 1 second chart to see what the crowd is saying, right? So that's going to be a challenge, but I will tell you, if you're practicing during Monday through Thursday, on the minute chart on a demo account, okay, you're going to have more wins than losses on the bag entry on the minute one on indices. For what we're trying to get is we're trying to get stronger trends on the E pairs and G pairs on the 15-minute or any pair for that matter. We're trying to get stronger trends. So yes, I like this. This is fantastic. Thank you for letting me know that this is a potential entry, but I think I'm going to sit it out and I'm going to wait. I'm going to look down here at these lower time frames to see how is the crowd moving. It's kind of like I kind of gave this like scary scenario to someone. I said, think of it like this, right? Most people get divorced because of money problems, right? So I look at it as you're following the crowd. And what is the crowd saying? If the crowd knows that there's a bomb in the stadium, right? They're going to start running out the stadium, right? I follow the crowd. If I get into this entry, you know, and all of a sudden, and even here, I'm trying to think, it might have showed you a little red, and then it would have, like, literally in 5 minutes, it would have started showing this little green edge out here. Again, that's another indication. Whoa, I don't know. What are the lower time frames telling me? Because if the lower time frames are now showing a green edge around here, I may end up losing this trade. So what I will do on some of the major or minor pairs is I might get into a bag entry, but if I show like, oh yes, I'm positive like a couple dollars, right? And then all of a sudden it starts like retracing, I'll go take a look at what the crowd is doing and I'll get out. Why am I getting out? Because I don't like losing, people. I don't like losing even a dollar. Let me give you an example of how much I don't like losing a dollar. Okay. I had a client in my limousine company. I took up to Blackhawk, which is a casino area in Colorado. All right. I take them up there. They tell me they're not getting out of the car unless I go gamble with them. And I explain to them, look, I don't gamble. I do not gamble. And so the lady hands me a $20 and 4 hours later asked me why I hadn't put it in a machine. I said, because you just gave me a raise. Why would I? You gave me a raise.
I love that. That's so good.
Check this out. Check this out. This is where it gets wild. Okay. Now she tells me, well, I gave it to you to gamble. So if you're not going to use it, I'm going to take it from you. And I said, well, with all due respect, ma'am, if you're going to take it from me, well, then I'll put it in a machine. Okay. I said, what machine has the highest probability of win ratio? Do you see what I'm saying? Arrow has the highest probability of win ratio, folks. Do not give up your software.
By far.
Do not give up your software, because I promise you, that is how I took my game to a whole nother level. I cannot stress. Like, literally, I have tears in my eyes, guys, of how this software has changed my life. Okay. Arrow is that machine I was looking for in the casino. So let me tell you what happened. I go to this particular game that she told me in the casino that she's seeing the highest probability of win ratio. I stick to $20 in the machine. I said, what do I do? Guys, I don't gamble. Okay. I do not gamble. I am all about Pareto's law, 20-80 rule. 20% of what you do equals 80% of your results. Where's my 20? My 20 is Arrow. It gives me the 80% wins that I need or higher. Okay. Sorry, I get emotional about this. I love it. In this casino slot machine, she says, just push this button. Just keep pushing this button. Guess what happened? It was like the 4X market. It went down and then it went up, and then it went down and then it went up, right? It went up to $20 profit. What do you think I did? Anybody?
You took that out.
Cashed out.
Heck yeah. Boom. You couldn't tell me fast
100% gain.
You couldn't tell me fast enough. I don't care if it would have gave me $100 profit. When I hit the $20, she had blessed me with I thought she blessed me with as a raise. When it hit $20, it was so funny to see her face. I get off the machine. She's like, you were only on the machine for 5 minutes. I said, you're absolutely correct. She goes, I go, here's your 20, because you said I have to, basically, if I didn't gamble, I have to give it back to you. So here's your 20. She goes, well, why did you quit the machine so quick? And I said, because I'm up $20. I'm up $20. Know your win ratio. Know your plan. Have a plan. Okay. It says in the Bible, again, this is my own personal beliefs, guys, so I'm not trying to push anything on you, but there is a beautiful saying in the Bible that says, without a vision, my people perish. Without a plan, your account will perish. Okay. So have a plan going in. If you're a novice, and let's say, for example, you're only, earning at your 9-to-5 job anywhere from $10 to $20. Make that your plan. Try to make sure that when you get into the markets, that every single day, you know, you're striving to earn $10 to $20 so that you can get rid of that job, so that you can have more practice time on the field. Okay. When the NFL players, the NBA players, the MLB players, when the major leagues go and play their games against one another, what do they do before they do that? Anybody? Do they just get on the field every time season starts? Or what do they do prior to?
They got training camps. They got lots of stuff going on.
Heck yeah. Thank you. Thank you for participating. They have training camps, people. Training camps. If after 2 weeks on a demo, you still ain't comfortable, don't get in on a live account. But don't quit Arrow.
There's no hurry to go live, guys. Get rid of that FOMO, because the Forex market, indices market, it's going to be there long after. Like, it's not going anywhere, at least for the foreseeable future. There's no last trade in the Forex market.
Right.
Actually, we have we're getting close to the end of our time here. Let's answer a few of the questions that we have here. There was one question about do you always use the fibs, and what time frame do you draw them on? That was Lorraine. So,
is that my question?
I believe that was, well, we can, whoever wants to answer that one.
I will chime in, because I've literally put in, we're talking quite a bit of time into trade, learning how to trade on the Fibonacci. Okay. So don't just take my advice. Go ahead and continue to be like Christopher Columbus and explore this new land of Fibonacci. Okay. That means watch several hundreds of hours of Fib videos. All right. But here's the thing. This is what I've learned, is that if you're going to scalp on the M1 or M5, you go 5 times above that to put your Fibonacci on. So like if I'm scalping the M1 and the M5 on my indices, I'll go to the M30. So you times it by 5, right? So if I'm on the M5, I'm going to times that by 5, that's 25. Okay, so then there is no 25 minute chart. So I'm going to go on the next one up, right? If I am wanting longer trades, you know, and let's say, for example, I'm going to, you know, be on the 15 minute, okay, and I want to look at the retracement of any trend. What I'm going to do is times 15 minutes by 5. Okay. That's an hour and 15. We don't have an hour and 15. So I'm going to go to the H1, right? And I'm going to draw my fib on the H1. If I'm going to be taking even longer trades that may last me weeks, days or weeks, and I'm going to be on the H1 and taking those trades, I want to be on the H4 or the daily, right? Because 1 times 5 is 5 hours, right? And we don't have a 5-hour chart. So I'm going to be on the H4 drawing my fib, or on the daily trying to figure out what was the longest trend what was the longest trend that held, and what was the reversal point of that trend. And that's where I draw my fib. Does that make sense to everyone?
I think one thing that you can maybe use as a guideline is that these arrow charts are initially on the foreign exchange pairs are drawn on a 15-minute chart. And if you can look at the zones where the bounce points are, if you're on a 15-minute chart and you're looking at where the zones from one zone to the next zone, using that as your starting your long leg of a Fibonacci retracement, you can use that. And then the biggest question is the zone big enough to where you have your profit margin targets? If you're looking for a 20 pip, if you're looking for a 20 pip target, which is what you are with the basic strategy with the arrow, if you're looking for a 20 pip target, you want a zone that's going to be at least 40 pips wide, just to be able to get that 20 pip target out, because you're looking at percentages of moves, and you start with the long move, and then you're looking at what the retracements of that move will be. But you can see where the Fibonacci's, it doesn't really matter what, they're more like price points, more so price points reference to a longer move, to a retracement, and you'll find out that usually it'll bounce whatever time frame whatever time frame I'm trading on. That's usually the time frame that I'm looking, but I may be looking at a higher time frame overall, especially if it's in a narrow range. To get that range that you're looking at, you have to move to be able to take the trade with the amount of target that you're looking for. If you're looking for just a 5 pip target, which we do sometimes in our wedge class, you want to have at least a range of at least 15 pips. So I think a 3 to 5 to 1 ratio of what your target pips are. If you're looking for a 20 pip target, you may want to be looking for a long leg that's going to give you maybe 100 pip range or 50 pip range.
Have you guys also gone over the fact that Nathan says don't trade if it's moved more than 50 pips during the Asian session?
Exactly. Yeah, the bag entry, if you're looking for 50 pips is usually his, I don't even like for that, the overnight session, if it's more than 50 pips, you don't use the one strategy. It has to be less than 50 pips because he's using a 40 pip stop. So he's going to want the range. If he has too big of a range, he's going to need too big of a stop. He's going to have to increase the stop size in order to accommodate for the trade. So
exactly. So let's see here. I'm looking at what you just said, because if you're going for maybe a shorter take profit, I could see why you would draw your fib on an M15. But if I'm on the M15, I never draw my fib on the M15. I always draw it on a higher time frame, just because I'm not trying to risk too much for a little profit, right? So I want to know more of like the overall, what am I looking at, right? And I would have drawn, if I was on H1, I would actually draw on the fib a little bit differently, right? Because on the M15, I drew it up because that's where we're going. We're up, right? We're up, but the overall trend on H1 is down. So that's where there can be, if you're going for like a small move, you could be on the 15 drawing your fib. But I know that, me and Jackie, we have a lot of powwow sessions. And if we're going to be on the M15, we're drawing our fib off the H1 or the H4 every single time. So I just wanted to chime in on that because, as you can see, that would have been different, right? I would have drawn my fib in the opposite direction, right? Instead of drawing it up, I would have drawn it down because I need to know kind of where this bigger move retraced at and what we're looking at. So,
actually, I see we have a CAD yen trade that came up. I should probably take a look at that real quick.
All right, let's do it. I'm going to stop sharing my
looks like we have a up move.
Go ahead and share a screen, hon.
Yeah, so let me go and grab the, see if I can find the share screen here. And then we'll probably be wrapping up here pretty soon. Second, right here we go. And we have a CAD yen. We had the alert. Here's the arrow. We have 1, 2, 3, 4. We have an up arrow. We have 4 zones, 4 green zones, 1 red zone is what I'm showing. That's all I've got. So it looks like an uptrend. And we have to figure out where our distance is. We have 34 pips. Let's scale it in. Widen it out a little bit. Here's the entry, which was at 81.08. I'm going to put my object on, put my lines on. So put this one at, I said 81.08. 81.08. Does that work? Or did I do it at the wrong time here? 81.80, that's what it was. 81.80. That's where that was the signal for the buy entry. Target would be, we have 81.80, so we're looking at 81.82. There's our target. We have room to the upside. We have our moving averages moving up, and this looks like this would be a viable bag entry at 81.80. And we could take that trade. We're in an uptrend, and we can go ahead and we can go and right now the price is in a little bit better. It has a little bit of a pullback. And so we could do one of two things. We could just take a market order and go in with this, Or you could say if it gives just do a buy stop buy stop at 81.80. And I'll go with a template, trading, new order. And we're going to do a pending order. And we do a buy stop. That means if it comes up to our 81.80, that's 81.80, we can place that order. And now it's waiting. If it gets up to 81.80, and as soon as it gets to 81.80, it will give us a buy and we'll be in the trade. And then we could be go to modify it. And we will, let's see if we can. I have to wait till I get in before I can modify it. Yeah, then I'll just wait till it gets filled before I would modify it. So basically once it gets up to 81.80, so because this way if it comes back down and keeps on going down, you're not getting in. But this way, if the move is strong enough, and this will also give you an idea how far back, if you got in right up here where the arrow closed, and you want to pull back. Now you could do one of two things. Either you could just say, I'm just going to get a better entry now, or you could wait till it comes back up and gets done through this little retrace.
Right.
Because if it gets filled with the buy stop, that means it's pulling back. It's kind of like a slingshot where you pull it back, it pulls back, and then when it slings up, it goes right through and it comes up. Now you're in it, and once you get in it, now you're oftentimes if it's in a strong uptrend, it won't even come back and retest your stop at all. And so with this one, I would be marking my stop where we have the target, and we'll mark the stop, which is going to be at 40 pips. So at 81.80, so that'd be 81.40. So that's going to be 81.40. And that should give us our buy stop, which should be down below. That's all. And you can see what I do. I often like having your stop having a nice little barrier. This is like having rebar before your stop. So it's got to get through all this area before you're going to get stopped out. So that way, if it does come back down, you're more likely to get another bounce off of this green zone and to take it up to the upside.
That is beautiful. I love this. Can I ask you a question? How did you get that little up arrow, the little red up arrow that you have on your chart?
This one?
Yeah.
That's over here. Come up here on the top. Mm-hmm. And there's little arrows. And there's a little up arrow, down arrow, and I can just go and you click on that. But when you click on it, I've got it set so that if you do the object list, go to object, and you can scroll down to find where the arrow is. Here's the arrow. Nice. And you can edit it, and I just make it as big as I want to.
Oh, this is beautiful.
So that way you can make it a little smaller if you want.
No, I love this because I actually, in my group training classes, I tell them to type out, look for buys or look for sells. I'll just tell them to put a freaking arrow on it and go with the arrow.
Well, there you go.
This is great. Thank you.
It was yesterday when he showed me that. And I was like, how do you know what direction to go? You didn't even zoom out. He's like, oh, well, I already did that earlier.
Yeah.
Oh, all right.
And then what I like to do is I like to say, if this is the last zone that gives me my up arrow, knowing that I'm in an uptrend, if this zone goes away on a down move, well, now I know that my direction's changed.
Yeah. Yeah. I like that. I like that a lot. And it's interesting because, that's why arrow is so powerful, because it does paint those zones. And sometimes I'll even mark up the zone with a horizontal line just so that I know where it was before it disappeared, right?
Right.
Having that little arrow next to it is just beautiful, Because that's actually one of my larger win days was like, my largest was like 8K in a day, but one of my larger ones was like 7,600. And those painted zones, because I had them marked up and I was doing a retracement. So I was doing a counter trend trade. And because I marked up the painted zones that had disappeared and they didn't come back, right? Because it's retracing, right?
Yeah.
They didn't come back, but because I knew that they were there and I marked up my charts, it helped me hold the trade longer. So this is powerful. Thank you so
Actually,
much.
there's a question in the chat box about showing the pending order again. Let me do that. So basically what I do, I just right click, let's see if I can, where to go? I need to try to, where's my clicker go? Did I lose my mouse? Oh boy, now I get my chart up here. Where did my order? Oh, there. What happened there? Okay, so what you do is you right click and you get this chart up, and you go hit with the trading, and then go to new order. So actually, it just took a long time because this didn't come up. Right click on the chart. This box should come up, and you have trading, and then it gives a little drop down with the trading, and it comes up with this box, and you want new order. So you go to the new order, and that brings up another box. This is just really slow here. And then you see market order type. This is market execution. So if I just hit one of these buy or sells, it would automatically just give me a market order. But if you this little drop down box here, and you can, and it says pending, and with the down arrow has pending order. So you put your pending order in. Now, here's where your choices are. If you have a buy limit, that basically means that you want to buy down here. So you would put your limit and say, when the price comes back down here, I want to buy. If we want a buy stop, you would go with a buy stop. And that what you're saying is that the price is already down low. If it comes up here, I want to buy it. So the buy stop is above where the current price is, but you want to be buying in that direction. If you want a sell stop, you'll go with a sell stop, and you would say the price is already up high. I think it's going to go short. I want it to come down, and when it gets down and keeps on momentum going, I want it to stop me in to go short. A sell limit would be if your sell limit, that means that I want to sell up here. If it gets up here, I want to sell it. That would be a limit, and then it's going to reverse back. Does that answer the question? And then you just put at the price you want it to be, your sell limit, whatever price you want that limit to be or the stop to be, and then just place the order, and you'll see it's down here. It's pending. They're pending orders. Now the fact they're below this blue line, that means they're not open yet. Hopefully that answers your question. And how do you get the arrow created prior to the opening object list? How did you get the arrow created? And to get that arrow is what we're looking. There's a little toolbar up here where it has where your chart time frames are, and then right next there's little two arrows up. There's a little drop down arrow right here in the corner. Just hit that little drop down. It gives you you can do a thumbs up. You can do arrows up and down, stop signs. You can do all kinds of little different icons. And so I just put the do an up arrow, click on the arrow, put it where I want to put it. And there's the arrow. Now, if I want to change the size of that, I just click on my objects list, go right click, get your objects list. And you'll see the whole list. You'll see a whole list of all the rectangles that the chart that Nathan has drawn. These rectangles are all these little red and green zones. But you scroll down and you'll see where the last one usually is the one at the bottom. And there's the arrow, and just make that blue, click on the edit. And then you can change the color here, or you can change the thickness. You have a choice of 4 different thicknesses here. If I want to make it real small, I can just make it real small and click OK, and it gets real tiny. Or I can edit it, and I can put the drop down arrow, and I can make it real big. Click OK, and it gets real big. And that's how that works. Actually, I think this next one, this size here seems like a nice size for the different zones. I'll make it that one right there. A little bit smaller. And that's all you have to do. Okay, I think we're just about ready to wrap up for today. Any other questions before we go? Did we catch all the questions?
Well, we got all the questions. Ken just put in the chat, are you going for 20 pips on the CAD yen?
I will go for 20 pips on the CAD yen if it fills. Right now it's on a pullback, but if it comes back up, and one thing I like with this is that we now have the green candle, it closed above our moving average line. The moving average has started to hook around. And we also have two nice big zones right below us as a little barrier. It's got to get through that before I would get stopped out. And you may take some heat with it, but right now, if it can break through, we have it right now. Is no reason to think it's not going to get our 20 pips. And the other thing I like about this is you can see right now my target is right about where it came down, where the down move started. So this is the area where the sellers came in. The sellers took control, and now the buyers are taking control back again, and it's going to take it up, and the sellers will probably take control again up here someplace. I'll be out before it hits the zone. This is the origin of this down move. This is the origin now of this new up move. It may end up being a little bit, you may end up having a high, a low. It may give you a lower high, may give you a higher low, but that's where you'll start seeing a wedge develop where you have lower highs, lows, higher lows, and it just starts working its way up until it really starts breaking in another direction.
We've got one last question in the Q&A from Looney Cad. So being that it's my first time here, how long have you guys been streaming analysis on Arrow? Since I didn't know this was a thing until Nate mentioned it on his stream 7 hours ago. What have we been here about 4 weeks doing this? 5 weeks?
We've been doing the Arrow itself. I would say, well, at least starting the beginning of January, I think is when we actually officially kind of started trading the Arrow. We were originally trading the Iris wedge alert system. We started that back in, what was it, Matt? About August, I think we started. Eva, we started.
Yeah, I would say it's about August or something like that.
And then about the middle of December, we stopped getting the Iris alerts. We thought, well, we have to figure out something else to do. And I was in the beta test group for the Arrow. And so I asked Nathan if it would be okay if we started, while we were waiting for wedge alerts for the Iris, if we could start showing the Arrow, because the Arrow was just launched, I think, the beginning of December, I think. So he said he gave us permission to start trading that. So now we just sort of gravitated to the Arrow. It's give us really good success. And then we can start, and there is a wedge strategy with M's and W's and wedges. If you look in the strategy list, you'll find one of those strategies, and we'll be going into more detail with some of those wedges. And we can, what I like to do is like to put it under a microscope a little bit when we get an alert. And we're trying to decide if we should take the trade. There's the basic 40 pip stop, 20 pip target. Does it have the room? Take the trade. And I think that's still the basic and best method to do. But if you put it under the microscope, sometimes you can see, well, maybe I can get a little bit better than 20 pips, or maybe rather than 20 pips, maybe I should take my profit at 15 because it's going to bounce at this point, or we expect it to bounce at a certain point.
Or maybe you don't need a 40 pip stop loss. You can put it underneath a really strong trend line. So
so let's say you don't need a 40 pip stop loss, you can look and say, well, if I have a 20 pip stop loss, I can double my lot size. So there again, things like that we're going to be breaking into with showing some of the different techniques of how to enhance the basic strategy of this Arrow.
Lots to come. This is grassroots, guys. This is grassroots. This is the foundation that's being laid, and it's going to change a lot of people's lives. When I was listening to, I'm going to say this, and I think we can end it there for the week. But what I got to share is when Coach Mo was talking about like when she was her passion for this software, and this is what she was looking for, you could feel that. You knew that it was just so powerful. You know, it gave me goosebumps.
I love you.
No, it's just like you gave me goosebumps because you can't fake that. You can't fake that. It's not about selling a system or marketing or nothing. It's, hey, this is what works. This is what we're doing. And it's available for you. Like people are going crazy if they could only have access to what we have. This solution, we're not hyping stuff up. The solution is actually working, like legit working. 80, 90% accurate. You know what? We took a trade yesterday and it didn't work out. Okay. AUD NZD. You know what? It doesn't matter because overall we know that we're going to be 80% right. So you're going to get those loser trades that even though everything looks right, you're still going to lose. That's going to happen.
And I would say, I would challenge, I mean, I've been trading a very long time, and I would challenge anybody to go out in the marketplace and find some place where you're going to get, we're looking at 100 hours of live trading every week around the clock for people. I mean, we have people in Dubai and London and Australia. We have people all over the world that are starting to use the system. And I challenge anybody to go online and find a trading program, a trading company that avails software of all sorts and have the flexibility and the coaching that you have for the price that you're paying for your subscription. I would challenge anybody to find a better place to go. And if you do, let me know.
Oh, for sure. I echo that 110% because we've been in the market, right, Al? We've seen what's out there. We haven't seen everything that's out there, but we've seen our fair share of systems and everything. And there's nothing as simple and straightforward as Arrow. And as you've seen, you can take something super basic like bags and exponentially take it to a new level. And then when you get really comfortable, you can start playing with the indices. You know, we're talking limitless future right here. Yeah, and all people, you need is the bags.
For people wanting to expand from just Forex, there's going to be stocks. They're going to be talking about cryptos. They're going to be talking about indices. There's a lot coming. There's a lot of value here. And on that note, I thank everybody. I can't tell you how much I appreciate every one of you coming in, sharing your questions and sharing your enthusiasm. And like I said, we're here every Monday through Friday. We start at 7:30. We usually go from 7:30 to 9. We went a little bit longer today. But again, have a safe weekend. Thanks for coming in. Stay safe and stay green. And we'll see everybody Monday.
Have a nice weekend, all. It was a pleasure having you all here.
Love you guys. Have a great weekend.
Thank you so much, Mo.
My pleasure.
Yeah, thank you, Mo.
Love you guys.
All right. Thanks. We'll see. Looking forward to your sessions.
Hey. Looking forward to teaching.